Obviously, nobody could have anticipated the events of 2020, either from a geopolitical, medical perspective, or certainly from a stock market perspective. It's really been quite remarkable. I mean, had anyone said that, okay, there's going to be a pandemic that's going to result in global lockdowns and dramatic declines in economic activity, hundreds of thousands of people will die, millions will be infected. Oh, and by the way, the stock market's going to be up 18% for the broad-based S&P 500, or even more incredible, 40% for NASDAQ. That just, those two things just do not seem to exist in the same reality. And yet that's exactly what happened. Certainly the fact that the pandemic focused people's attention on stay-at-home activities, whether that's remote work or gaming or what have you, was a factor that drove the indexes higher, because you had the largest market cap companies, or companies that by and large, benefit perhaps isn't the right word, but were certainly better placed to weather the pandemic than other sorts of companies. So as we look forward to 2021, an obvious question to ask is, well, how long can this go on? We have a new administration, and it's going to be a year where a lot of different cross currents, whether they're pandemic or government related, we're going to have to think about, very carefully about what the effects of that are in terms of various sectors and their performance.
The other thing to notice is that over the past decade, we've seen these dominant tech platform companies exert additional influence in the market, at least, and over the economy. As the economy was impacted by the disruptions from the coronavirus pandemic, these companies became even stronger in terms of their market position, because they allow workers and companies to operate virtually and made that easier for people. And they grew to be a bigger portion of the S&P 500 by the end of the year. On the other hand, a lot of small businesses were disrupted and they don't have the same financial resources and so forth. And I think that we've seen the continued development of kind of a two-tiered economy where there are haves and have-nots. And that's one of the impacts of the virus, fortunate or otherwise.
Investors are looking forward to 2021 as a year of recovery and reclamation. However, it is reasonable to expect that such a path is going to be facing interruptions, lockdowns due to the virus mutations, and difficulties in inoculation of the world's population. Investors have benefited from the accommodative monetary policies of central banks around the world, which we believe will continue through much of this upcoming year. Sukuk issuance in 2020 fell by about almost 14% when compared to the previous year. I think this decline of Sharia compliant issuance in part was the sovereign and sovereign government related entities having to make a quick snap to the market. My belief in the upcoming year in 2021 is you'll probably see more of an increase of Sharia compliant issuance, being primarily driven by government and government related entities. Although with some of it now coming to be from the corporations that are looking to also do a little bit of gap funding, as well as funding some growth.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting amanafunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Amana Funds in a free prospectus or summary prospectus, please visit amanafunds.com or call 1-800-728-8762.